Lots to talk about today. We had a pretty hard rejection off of this orange line that I have here. If you guys have been watching the channel for a while, you know this is the one that goes back to 2009 lows, and it drags all the way across to these resistances. You can see that the 2018 corrections actually started off of this resistance. That's where we fell, or we made the top before we had a big correction. And then also the COVID crash, we hit the top resistance here and then fell off of it. And recently, as you can see here, we rejected off of this level pretty hard. At least we did yesterday. So it's going to be interesting to see, will this only be a minor pullback, or will this be a strong rejection that has continuous downside after? And in this video today, I'm going to share some clues that we can use to give us a sense on current market sentiment and where the market can go. So first off, tech, very important to look at because tech has been relatively weak in comparison to the rest of the market. As you can see here, I've mentioned this at least on the Twitter account, but we have the top resistance here from around the all-time high range and also our bottom support. And this is a channel. We've been trading within this channel for this entire year so far. So you can see we've used the bottom range as a support a few times and top range as a resistance, like we did back in March, as well as early August to mid-August. We actually had a fake breakout in the middle of August over here, but I consider it to be a fake breakout because we fell back into the channel soon after that and continued down a lot lower. Now we had a breakout technically yesterday. As you can see here on the 15-minute chart, we gapped down right on the level. That is no coincidence. We literally opened QQQ exactly on this line right here. I haven't changed anything from it. As you can see from this line, you can see the candle started right exactly on this line, roughly 287.41. We opened exactly on it and continued down lower. We retested it intraday, as you can see here, and it got rejected. We've been rejected twice today off of this level, which shows that there are a lot more sellers up here. So this is acting as a supply range, at least up here, and this level is acting as a hard resistance. And unless we can get back above it, which would be very crucial, especially if we're able to gap up back above it and hold it like we did on this day on Tuesday, then there will be some more downside to come. So definitely watch this trend line right here, because this is going to act as a pivot. Above would be bullish, especially if we can hold, and below would be chop and bearish emphasis. This is a very simple tactic you can use, or at least this level is very simple to use for your overall positioning sentiment. Along with tech, I do want to talk about NVIDIA here. This earnings report, if you go to the 15-minute chart here, you can see nothing really happened during this earnings. We only went up to 161.20, nothing crazy at all. And if you read our article we've been showing you guys on Twitter, we said the options market was implying a 7.85% move post earnings. Look at what happened on NVIDIA over here. You can see we barely moved after earnings right here. We said this means, as you can see over here, that there is a 37% theoretical edge by selling volatility through this event. And we actually had a lot of people in our Discord earlier that did end up selling contracts before earnings. And as of now, again, stuff can change overnight, but as of now, it looks like that will be a very profitable trade by the open for tomorrow. So we're going to start doing a lot more of these articles before earnings, just so you guys can see the data behind earnings and potentially see some good trading strategies for that. And also on top of that, we do have our Black Friday sale that's going on right now. It's 50% off all plans. This is literally one of our best sales of the year. So if you are interested in Cheddar Flow, we will have that link in the bio below. But other than that though, NVIDIA, very interesting because of the fact we didn't have that much of a pronounced move on the stock after earnings here. Now, something very crucial to note is the dollar. It seems that, at least at the moment, we are finding a demand zone in between roughly 105 to 106, as you can see here by the wicks on these candles. We've tested and we've discovered lower prices from this downward trend. However, it is getting supported as of now, and we'll probably see this chop in roughly a range between 105 to 108 for a bit. I don't expect it to have that much of a pronounced move, just because it is getting fairly oversold on indicators. We have seen this get hammered for the past week straight, as you can see up here when we retested this critical trend line I've been talking about for a while in the videos. We retested it and it got rejected very hard, and now we are seeing it form consolidation around here, which can mean some more chop in terms of the overall market. A general rule of thumb for this, if the dollar goes down, and then we see the inverse happen in the market, we'll see the market continue to go up. And then also, if we were to go up with the dollar, then we would see some more weakness in the general market. Now let's talk about SPX. It seems as of now, we have been consolidating for a while. This is not a bullish form of consolidation though. As you can see here, we did have quite the gap up because of PPI on Tuesday. However, the gap up was not able to hold. That is crucial. We've stayed above 4,000, as you can see here, but it was not able to hold above for the rest of the day. We fell down because of the news regarding Poland. trend, and it's actually stayed down ever since then, which is bearish in a sense that we haven't been able to reclaim up above 4,000. If we were to get back over 4,000, we probably would see a new high for this move. But as we stay below, it's most likely, at least for right now, we have been consolidating around this key demand level, and it's most likely going to fall under this demand level. Now, does that mean that the high has been printed of this move? I personally don't believe that is the case. However, there still is a good likelihood that we do get some form of a pullback fairly soon, because this type of consolidation is showing a decent amount of weakness. The fact that we were not able to hold above, like I just said before, and also consolidation at the end of moves typically ends up being a sign that the upside is getting exhausted. And the fact that we consolidated and chopped just in a very, very small range for all of today with not much movement at all and closed within the demand range leads me to believe that there could be potential downside. Is it something that I'm interested in shorting at the moment? Not really, because if we do get this downside, I'd personally be thinking it would be more so of a long opportunity. For example, right over here, if we go to the daily chart, if we were to retrace, let's say, and have some form of a pullback, this line right here, the gray one, if you remember this is the one that goes to the COVID low, as you can see over here. And if you drag it across to the previous yearly low we had in June, it was on June 16th to be specific, you can see here that we did cross above it. And not only that, we crossed above it on last week's weekly candle. So if you go to the weekly chart, having a retracement or some form of a pullback to retest that level, not out of question at all. And the fact that we're still above it on the weekly shows a bullish emphasis. So at the moment, unless we're able to get back below, especially on the weekly candle, below this level that is, then the trend is fairly bullish, even though a lot of people may think that it is bearish out there in the public. I've seen a lot of bears kind of randomly come out after seeing these types of daily candles, which, by the way, just technically speaking, this daily setup is not bullish at all. However, even if a pullback ensues after this, there still is potential upside, at least for continuation. So I'm personally not shorting this, thinking that we're going to go very, very far off of it. However, as of now, that does look like weakness for the near term is a good possibility. Something else notable is the line up here, very similar to the QQQ chart I showed you earlier. If you go to all-time highs on SPX back here on January 4th and drag it down across resistances, you can see that there is a pretty similar structure to this yellow line right here. You can see we had a resistance end of March up here, resistance up here middle of August, and now we're getting pretty near to it again. It wouldn't be out of question to have some form of a retest of this line from the COVID low and have a potential bounce to retest this level up here, which is roughly 4,100. Personally, I think that is the most viable scenario. Now, could it continue to keep going up from where we are and bait all the bears like it did right here? Yes. But personally, I think 4,100 is a good possibility on here. Now, I'm always going to be looking for the best risk reward setup. And right now, that's not presenting itself. I'd rather wait to see if this COVID trend line is retested again, because then I could have a better risk setup here, because then I know if we have a close below this line, then I would cut my position, and that'd be a small cut in comparison to potential gain of going up to 4,100. But it does look like if this trend is going to stay consistent, there's a possibility we do test up here fairly soon, and that would go against what the public sentiment is as of now. One last thing to note, we have stayed true to the 1 billion plus streak every single day for the last 3 weeks in signature prints. That is not characteristic at all. We've had over 1 billion in premium in signature prints every single day the last 3 weeks. You can look at any day here on the dark pool feature on Cheddar Flow. 1.1 billion yesterday. Haven't had as much as last week this week, but still we're getting over 1 billion, which is quite a bit. If you go to last week, you can see some of these days, like for the 10th, for example here, you can see that we had 5.1 billion in premium. That is very rare. So all of these prints, interesting to see these, especially the fact that we are above all of these prints. Let me remind you, most of these prints are between 375, 374 roughly to 389. That's the overwhelming majority. Out of the last 3 weeks, we've seen 1 billion plus every single day within this range. That is not common at all. And the fact that we are above this level, or at least this range right now, is fairly bullish as long as we stay above. There is a potential that it could fall back below, and then it would be the inverse for bearish. But as of now, we have to play with the cards we're dealt. We have to see what the market gives us. But again, we are above these prints, so you need to keep that in mind at the moment. It would be even more bullish if we were able to get back above the orange line I showed you earlier in this video. That's kind of the range we're in right now, basically between this 389 for the dark pools that we saw below here, and also this roughly 402. This is a range of kind of chop in between both of those. If we do get above that 402 roughly, then that would be even more bullish emphasis to the upside, because we got back above the orange line. However, as of now, we are between both of these levels, so I'm personally waiting for a better risk reward setup. area that I will eventually swing. But other than that, though, appreciate you guys watching this video. Some fun times ahead in the market, and I will see you guys in the next video on Sunday.